Ben Affleck is running an AI startup. Netflix bought it. I don't know where to start.
I mean, the man built a whole second act. Affleck to Duncan to artificial intelligence.
That's not the story, Nate. The story is Megadeals are back. 111 transactions over $5 billion this year, up from 63.
Which is exactly the energy behind Athora dropping $3.5 billion in equity commitments in a single week.
So yeah, big swings everywhere, even in Hollywood. The rundown.
Okay, Lonza first. They're selling the Capsules division to Lone Star, but keeping 40% equity.
Which sounds like a divestiture, but is actually more like a very expensive roommate situation.
Right, they get the cash, they keep the upside. I actually think that's clean.
It is clean. Lone Star gets operational control. Lonza doesn't fully walk away from a business that probably still throws off decent cash. Fine. Next.
The Daily Telegraph, £575 million, done.
Finally done. That sale dragged on so long, I forgot it was still happening.
Most politically charged media deal in recent British history, allegedly.
Allegedly. Nate, there were parliamentary hearings.
Fair. Okay, Ben Affleck.
Wait, I need a second with this one. Ben Affleck was quietly running an AI post-production startup.
Quietly. That's the thing. Guy is famous for being photographed looking miserable with a large coffee, and he's out here building enterprise software.
And Netflix just bought it, which raises the obvious question. How many other celebrity-backed AI shops are sitting in stealth mode right now waiting for a streaming check?
I'm going to say a lot. I'm going to say an uncomfortable number.
Servier buying, day one, biopharmaceuticals, rare oncology. This fits a pattern we keep seeing. European pharma shopping in US biotech for pipeline they can't build fast enough internally.
Totally. And rare disease is where the pricing power is. Servier knows exactly what they're buying.
Agreed. Actually well executed. Don't love saying it, but there it is.
Pro Ampac absorbing TC transcontinental packaging, full manufacturing footprint, flexible packaging consolidation just keeps going.
It's not glamorous.
It is never glamorous.
But those deals print money if you execute the integration.
Big if.
Always a big if. Okay, zooming out for a second. Global deal values up 36% year over year. Mega deals nearly doubled. America's doing 60% of total volume. The market is back.
The deal-making class emerged from its rate-induced hibernation, and it is hungry.
We're going to talk about what that actually means for valuations right after this. The big one. Okay, so Athora, $3.5 billion in fresh equity commitments, regulatory approval locked in, and they're absorbing Pension Insurance Corporation. That is a massive bet on the UK annuities market.
And I mean massive in the literal sense. PIC manages something like $50 billion in liabilities. You don't buy that and shrug.
Right. And the timing matters here. Because we've been watching this mega deal resurgence all year. Globally, deals over $5 billion nearly doubled. 63 last year, 111 this year. And Athora is squarely in that category.
The rate environment finally broke the logjam. 2 years of everyone sitting on their hands, and now the deal-making class is basically sprinting.
America's up 55%. 60% of global volume. I mean, it's not subtle.
No, it is not subtle. But here's where I'll push back on the Athora story specifically. Everyone's framing this as a clean win. Regulatory approval, equity committed, deal done, but $3.5 billion in equity for an insurance acquisition in this rate environment, that's a lot of capital chasing a business that is essentially a giant spreadsheet of long-duration liabilities.
Okay, but that's also exactly why it works. Athora's whole model is matching those liabilities with alternative assets, private credit, infrastructure, real assets. The liabilities are the product.
Sure, if the assets perform at us.
Which is the risk in every insurance deal ever made, Nate.
Fair, that's fair.
What I keep coming back to is what PIC's policyholders are actually getting here, because Athora is backed by Apollo, and there's a version of this where it's totally fine, and there's a version where you've just handed your pension annuity to an alternative asset manager and you're hoping their vintage years don't look like 2008.
You've been sitting on that concern for a while.
I read the footnotes for a living.
Look, I think the bull case is real. Athora has done this before. They know the playbook. The UK bulk annuity market is genuinely enormous right now. DB pension schemes are offloading risk as fast as they can find counterparties.
I don't disagree with the strategic logic. I just want to see the asset allocation disclosed more clearly before I call it a clean win.
Classic Maya. Deal closes. She wants 12 more pages of disclosure.
13, actually. And speaking of deals where someone is definitely not disclosing everything, we need to talk about Ben Affleck.
Oh, we absolutely do. Voices? Okay, so PwC dropped their numbers, and I cannot stop thinking about one stat.
The Megadeal one.
63 to 111 in 1 year.
That's not a recovery. That's a defibrillator moment.
That's exactly what it is. 2 years of rate-driven paralysis, and then just boards everywhere going, fine, we're doing it.
And the Americas specifically, up 55%, 60% of global volume. That's not a rising tide. That's one very large wave.
Which tracks, right? You had all this dry powder sitting there. PE firms were getting antsy, and the moment rates gave them any daylight.
I'd push back slightly on the narrative though, because mega deals nearly doubling sounds triumphant, but it also means more risk concentration, bigger bets. If 2 or 3 of those blow up.
Fair point.
The Seeking Alpha crowd flagged Electronic Arts this week, which I found interesting. Stocks edging lower, there's chatter about Middle Eastern funding sources and where that capital's actually coming from.
Gaming M&A has geopolitical strings attached now. That used to sound paranoid.
It doesn't anymore.
No, it really doesn't. And then you've got Frontera Energy. Parex Resources apparently submitted what Frontera called a superior proposal for the Colombia assets.
Oh, superior proposal. The most corporate way to say someone is trying to steal your deal.
It's the M&A equivalent of a second date text while you're still at dinner with someone else.
That's genuinely accurate and I hate it. Latin American energy is heating up though. That one's worth watching.
Speaking of watching, Ben Affleck.
Oh, we are absolutely getting to Ben Affleck. Spill the tea.
Okay, so Ben Affleck.
Ben Affleck.
The man runs a stealth AI startup. Netflix buys it, and none of us knew.
I genuinely cannot decide if that's impressive or if we should all be embarrassed that we missed it.
I think it's both. He was out here doing Dunkin' runs and closing venture rounds simultaneously. That's multitasking.
The thing that actually gets me is the question it raises. How many other celebrity-backed AI shops are sitting quiet right now, waiting for a streaming giant to show up with a checkbook?
Dozens, Maya. The answer is dozens.
That's what I'm afraid of.
Okay, pivoting to something I love way more than I should. Diana Shipping bumped its offer for Genco shipping to $23.50 a share.
Classic, we know you're talking to someone else energy.
Right? That's not a revised offer, that's a warning shot.
Genco hasn't exactly been screaming, "We're flattered, please stop," which tells you everything.
There's definitely a third party in that room somewhere.
Or Genco's board is just really good at playing hard to get.
Also possible, also valid strategy, honestly.
And then there's TGI Solar Power filing a letter of intent to acquire XGC Corp.
For $1.8 million.
1.8 million.
I've seen seed rounds bigger than that.
Not every deal needs 9 zeros, Nate.
No, but it's kind of refreshing. In a week where we're talking about 3.5 billion euro equity commitments and mega deals doubling year over year, someone out there is just quietly spending less than a starter home in San Francisco.
That's the most grounded thing you've said all week.
Don't get used to it. Speaking of things that are definitely not small, the Telegraph sale. Tomorrow's radar. Okay, 3 things on my radar for tomorrow.
3? You always say 3 and then do 5.
The Nuveen fund mergers, BXMX, DIX, SPXX, they're supposed to close before March 30th. Shareholder approval's already done, so any last-minute regulatory snag that surfaces tomorrow is going to be a red flag worth taking seriously.
Agreed. Also watching Sanofi's Medley divestiture to EMS 500 million Brazil deal, and the documentation still hasn't fully dropped. That could move any day.
And then the Frontera Parex situation in Colombia. Parex submitted what Frontera is calling a superior proposal, which is just corporate for...
Someone's about to get into a bidding war they didn't plan on.
Exactly. Latin American energy assets are hot right now, and this one's nowhere near settled.
I'm actually more interested in Medley than you are on this one.
Oh, I know you are. You've been waiting for the pricing footnotes.
Always. Speaking of things hiding in plain sight, stick around because we need to talk about Ben Affleck.